All right, guys, what's going on, everybody? Pop-up session number 11. A couple of things I want to go over today. We're going to go over QBTS because it illustrates the IPO high breakout. We talked a little about this in the chat. We're going to do 10 more stocks in the Focus 40, which I haven't made any changes to yet. Um, all the stocks in here so far are good, except I took out, I can't remember what stock it was. If anybody remembers, Baba. I took out Baba last week on the earnings gap down. So I could add one or two. I've got about maybe 7 or 8 stocks I really want to add to the list, but we made a rule. We're going to keep it around 50. It's at 50 right now. And if I take something out, it's going to be a good stock that I take out. I'm thinking maybe XPO here, even though it's still got the setup it had before. But there are other stocks that are really strong. Like we talked about those regional foreign banks. What were they? BMA and GGAL that I really want to add. So I might take this out. If you guys have any candidates, you can always throw them my way. I'm probably watching them, but you never know. Sometimes you guys have some good stocks on your list. Someone give me just a message here just to make sure you guys can see my screen and hear me okay. And as usual, if you guys have any questions, let me know. So we'll go over a few more of the Focus 40, the why each of these are in there. We should know. You guys get the list, and I think you guys have a general idea of why they're in there, but we should go over each of them. The IPO strategy on QBTS. And then I must have mentioned credit spreads related to options last week because I got at least 4 or 5 questions specifically about credit spreads over the last few days. And so my guess is I mentioned it and you guys want to know what that is. So I'll talk a little bit about that. It's option strategy. So those of you who don't really understand options, it'll be a little foreign to you, but I think when we illustrate it, maybe it'll make some sense and you guys can investigate doing some of these. So first of all, let's look at QBTS. Actually, let's go over the IPO strategy. You guys know this. I love trading stocks that have IPO'd in the last few years. And when we say IPO strategy, there's a tendency to think of stocks that just IPO'd. But for me, IPO is a stock in its first, 3, 4 years because these stocks can be very volatile and make really nice runs. So a common setup with the IPO or a common pattern we see over and over again. And by now, I've went over so many of these. A lot of you guys have seen this a bunch of times too. That is, a stock will IPO wherever. And during its early stages, usually before lockup expiration, lockup expiration is when the insiders can start selling. The first 6 to 9 months, they have to hold on to their shares, and they can start selling at about 6 to 9 months, and that's when you'll start to see often a completely different pattern in the stock. And what we often see is you'll see a stock is doing a bunch of stuff like in the early stages, and then it gets hit. And even these strong stocks, this happened with Facebook way back when. It took Facebook about a year and a half before it ever hit its IPO high, which back then was around 40, and it had gone down all the way down to 17. And what we often see is then it bottoms out, and this can be like a year to 3, 4 year process. Every IPO is different, but we see this pattern over and over again, and then they start to pick up steam again, and you get these continuation patterns going. And I've run out of room here, but then at some point IPO high breakout, and when we get, first of all, it's often a big move to the IPO high. And you often get continuation pattern after continuation pattern. We've seen that in a number of stocks recently. And then when they break their IPO high, you often get these huge, like sometimes multi-year runs where the stocks will make 100, 200, 300% type moves. So like if this was at 100, you might see this thing go to 200, 300. Not all of them do it, but it's a very strong setup. If we look at Facebook, and we'll just pull up the weekly on it so we can go back to when it IPO'd, you'll see that. Whoops. Oh, Meta. Sorry. Meta here. Notice here, this illustrates, this is essentially exactly what I just drew. And you see it over and over again. Look at here. IPO, this one actually didn't run much even during the IPO period. Early on, it made its IPO high around 40, if I'm remembering right, yeah, 45. And then notice here, bottomed out at 17. And it wasn't until about a year and a half later, it broke its IPO high. But then once it broke its IPO high, went on a multi-year run, and so see, it went from 45 to 225. And this is very common. Look at Duolingo here. Duolingo is one stock that is on our Focus 40. But notice, again, exactly what I drew here. And you see this pattern over and over again. It's amazing how much you see it where they do very well, make an IPO high, in those first few months. Sometimes it's very early on, but wherever it makes its IPO high, you can see here, it was around 205. And then notice here, a year and a half kind of bottomed out. We see the bottom formation, then continuation patterns, then broke its IPO high here. It actually went back below its IPO high. This was kind of a function of the market. But then you can see here, once it kind of finally just made its run after its IPO high, has gone from 214 to 519. So over a 100% move. So you see these kind of IPO high breakouts all the time. And QBTS is doing that right now. So if we look at here, this one made its IPO high very quickly in the first, let's see here. So it IPO'd here, like within the first couple of weeks, made its IPO high here around 14. Notice here, bottomed here at 41 cents, and then has been making its run here, continuation pattern, I said AI, quantum computing stocks, and you can see here now has broke its IPO high. And the nice thing about this is we see these stocks make very big runs, and if they do, that's great. You get big profits off it. And multiple ways you can trade it. You can either jump in and hold for if you're willing to hold for a long time and try to get 50 100% type move, or trade continuation pattern after continuation pattern, more classic kind of swings. And then if you get stopped out, very small loss. So it's like either you make a very small loss or you get some either big consistent wins with your swings or one big win if you're willing to hold. So QBTS is doing that right now. It's not in the Focus 40. I went with I think a couple of the electric plays and IONQ as my quantum computing play. So QBTS isn't in here, but that doesn't matter. It doesn't mean we can't trade other things. QBTS here, you can see sitting at 17 now. I'd probably wait for it to see if it pulls back some. I get a little better risk reward. But definitely QBTS on our radar here, even if it's not in this Focus 40. Okay, so that's the IPO strategy here. We'll go over Focus 40 in a second. I've been getting a lot of questions about the credit spreads. So let me just quickly go over what that is. And just quick, just to give an idea here, how many of you here trade options or have traded options in the past, or just understand what a call and a put is related to options, like buying a call, buying a put, selling a call, selling a put? Just so I know that at least some of you have a basic understanding. Okay, it looks like a lot of you have either dabbled in it or have some basic understanding. Good, good. Okay, so you guys know to go if you're bullish on a stock and you're just trading one single option, right? No multi-leg kind of strategy. If you're bullish, you can either buy a call, right? Or you can sell a put. Two ways to do it, right? If you're bullish. And let's just talk about it from the bullish perspective so it doesn't get too confusing. So there's two things you can do. Buy a call, sell a put. You're going to win more if you sell a put. You're essentially like the house. You get a better break-even price. And as long as it expires in the money, you profit off it. Buying a call, you are going to win less times because your break-even is lower. You're losing money every day. Your theta, essentially, whatever it is till expiration, you're losing a kind of divided amount per day. Every day you hold that thing, you're losing money, whereas you're gaining when you sell. And for those of you who don't know about options, you'll understand if you start to investigate this stuff. But every day you hold something that you've bought, you're essentially losing money. So that creates a higher break-even point. So your win rate is going to be lower because not only do you have to get, like if you enter a stock that's trading at 100, it has to go above that level. More than look, I'm not sure if I can explain this right. Let's say you have a strike at the money call at 100, the stock's trading at 100. If you just bought 100 shares and the stock is at 100, no harm, no foul. You haven't gained or you haven't lost on it. If you buy the call with a strike price at 100 and it stays at 100, you're losing money because you're losing theta, you're losing time. So there's a break even price you have to get over, which makes it difficult when you're buying. And that's why a lot of people lose on options. You're essentially losing money every day. Now, the question is, why don't I always sell? And that sounds great because you're kind of like the house and you're getting the advantage of the time. Whereas when you're a buyer, you're losing money every day. When you're a seller, that theta is in your advantage, at your advantage. The problem is, and you hear the term like naked puts, you can lose infinite. You can lose a lot. What will happen oftentimes is you'll win a ton. You'll have like an 80-90% win rate on your say you're selling puts, but that one time it goes against you big, you will lose a ton. So it's very risky to do. So the way to combat these problems with this is to use credit spreads. It combats the problem with selling your put and getting that huge infinite loss because it automatically limits how much you can lose. It's almost like putting in a stop, but it's a hard stop. Like, when we put in our stops here, we can mess with them, right? And you can essentially not have a stop if we don't adhere to the rule. With your credit spread, the way you create the spread, it's essentially a hard stop and you can't lose more. So that solves the problem with selling in that it limits your risk. With everything you do in options, there is always a disadvantage. The disadvantage is it also limits your profit. So there's a level where you're not going to be able to make any more profit, but you've protected yourself. It solves the buy call problem of time decay because what you're going to end up doing is you're going to buy and sell at the same time. So that lowers the impact of holding and the time decay. So that's a big advantage with using a credit spread for when you're thinking in terms of buying. Also, it makes it cheaper. So, which is always a good thing, especially you guys with small accounts. It makes it cheaper. So if you don't know much about options, let's say we were buying Meta right now. So we can see here, Meta is trading at 637, and a lot of you guys don't like to trade these more expensive stocks because, to control 100 shares of this, it is going to cost you 60, or position sizing wise, it's $63,000, right? So you have to have a pretty good size account. Even if you have a $100,000 account, you have to kind of go on margin just to make sure you can enter other positions. Well, one thing you could do instead of just buying the 100 shares, you could buy one call, right? And that'll make it cheaper. So, and when you buy one call, you essentially control 100 shares. So if we bought one call of Meta, let's say we're going 30 days out, right? And we'll do it at the money, which is about the price of what the stock is trading right now. So if we go 30 days out and we buy the 637, I guess there's a 637.50 call, which is just about where the price is. Notice here, my net debit is 23.80. That's essentially telling me that it's only going to cost me $2,380. So imagine you have a $10,000 account, right? And you want to control 100 shares of the stock. You couldn't do it. You couldn't buy 100 shares because it's going to cost you 60,000, right? You can control 100 shares by buying one call, okay? And that's great. But again, with everything in options, whatever is good, there's a downside to it. Notice here, we're going to hold this thing for 30 days. Each day, we are losing money. That is why the stock's trading at 637. Let's just say to 638. Let's say we're looking at 638. Notice here, if I held 100 shares and it stayed at the same price, I wouldn't gain, I wouldn't lose money. It's fine. Time doesn't hurt me when I'm just holding my 100 shares outside of maybe opportunity costs. But in terms of actual gains and losses, doesn't hurt me. If I buy the call and the stock doesn't move, by the time we get to that 30 days, I've lost everything in time value. That 23.80, I've lost it all. So my break even holding to expiration, the stock has to go to 661 from 638 just for me to make any money, right? And then the more it makes, more higher it goes. Obviously, I make more and more, and you can see that here on this profitability chart. So that's a big negative with buying calls. I'm losing money every day just holding this thing, and I want the move to happen quicker. Notice here, if it goes to 655 in, say, 10 days, I make about $741 off my 23.80. That's a pretty good percentage gain, right? But that same 655, if it doesn't happen till the 30 days, I lose $630. So this is all time. It's because of time. And notice here how profitability changes according to time. So this is the big problem with being a buyer, a buyer of calls. So how do we combat that? And notice here it's costing us 23.80 as well, which is still cheap compared to buying 100 shares. But watch what the credit spread is going to do now. So what we're going to do now with the credit spread is we're going to essentially create a floor and a ceiling. So we are going to buy a call in the money, and that's going to set our floor. And then we're going to sell a call at the money. So for example, if we have a stock trading at 100, what I can do here is I could buy a call at say 90. I could sell a call at let's say 110. Okay, so we've gone 10 this way and 10 this way. What's going to happen when you do this is this is going to cost you something, and you're going to get a credit for the sell. Okay, so let's say in this scenario, my buy call, which is my floor, and here this is my ceiling. This is essentially how much I can profit, how much I could lose. Okay, let's say that at 90, the buy call is costing me, let's say $7. Okay, so which you multiply that at 100, it costs you $700. Okay, to buy one call. Then my sell call, let's say I'm going to get let's say I'm going to get a $4 credit for it. We're just making up these numbers, but $4 credit. The difference in this is my total debit, so that's going to be 3. Okay, and I hope this isn't too confusing for you guys, but at least it gives you a starting point to start kind of getting used to this or understanding it. And after we do this, we'll get into the Focus 40. So this is going to give me a $3 credit or $300. Okay, what this is telling me is the most I could lose on this thing is $300, which is nice, right? So my $100 stock could gap down, and I would still only lose $300. Okay, so let's take a look, and then I've also capped. I've created a ceiling as well in terms of how much I could make. To figure out your profit, you take the width of your strikes, and then you subtract your debit. So in this case, the width of my strikes is 20 minus the 3. The most I could make out of this is 17 here, or $1,700. Now, if this thing gapped like 30 points and I would have made $3,000, I still would only make 17. So it creates a ceiling and a floor for you. But usually when we do these things, we have a target and a stop, right? So I can create my ceiling around a target. Like, so if I was trading Meta and I'm doing a credit spread right now, I could say to myself, I'm going to create my ceiling at 660, and I'm going to create a floor somewhere in here. Or I could, get more ambitious and go all the way up here. So we could do that with Meta right now. And let's do here's the bull call spread. So we said 660, right? Okay, that would be kind of our ceiling here. And let's set our floor at say 630. And now the way this plays out, the most I could ever lose. Remember when I was just buying the call, it was 2,300. Now it's only 1,400. And we can change this too. We can create a tighter floor. And now here, I would only lose 747, right? So that's pretty good. And imagine if you have how many times you can do this if you have a smaller account. You can be doing credit spreads with Meta, which you would have needed like a $60,000 account to control 100 shares. You can be playing it with a $5,000 account. You're just doing 750 each time. So in this case, in the spread we've created here, notice here, if we hold to expiration and the stock hits 660, I make $1,000, right? And it doesn't matter. It could go to 695. I still only make $1,000. That's kind of the downside of it. But we've already targeted that 660 anyway. The most I could lose on this is 747. But again, you don't have to hold it to expiration. If I was down 300 here, I could get out here if I wanted to. This is just the max. So remember when you're thinking about these, is minus 700 versus plus 1,000 a good risk reward? Doesn't matter. You can control, when you get out of this thing. And you can see all the different profitabilities in here as you're holding a certain amount of days. So these credit spreads make it very cheap for you to control a lot of shares. So Again, those of you with small accounts, I would definitely look into potentially doing these credit spreads. So, and if any of you have any questions, you can ask me later. But this at least introduces you to the concept of credit spread. So, if you see us trading like, these, Meta, and you're like, I have a $10,000 account. I don't want to have to just buy 5 shares or, use up my whole account. I want to be able to take multiple positions. Notice here again, you could do the same thing with Meta, only costing you here. In this case, I mean, uh, we can play around with this and it can be cheaper or more in terms of how much it costs us and using the farther you go out, the more it's going to cost you as well. But definitely look into this, especially if you guys have smaller accounts. All right. Again, if you guys have any of you ever done credit spreads? Just curious here. But hopefully this made sense here. I know options can be very confusing. Let's get to the Focus 40 now. I don't remember exactly where we left off last time. I think we were about 30 in. So let's start at Pega. Okay. All right. I think we ended on PanW last time. So let's start with Pega here. And we're just doing these in alphabetical order. We'll do about 10 today, and then we'll go up to about number 40. Then tomorrow or Thursday, we'll do the remaining 10. And at some point here, I'm going to start adding abstracting to this, but I still like all the stocks here. Notice Pega here broke out of this range today, but obviously the reason it is in here, software application has been a very strong trender. Look at all that good volume. Had a deeper pullback than we would have liked. Most of our stocks that are on this list don't have this deep of a pullback, but it came back so quickly on earnings that now it's near highs, showing relative strength, and then another breakout here today. And common theme here. Look at the growth fundamentals. Notice here, institutional ownership is increasing. 49% of its shares are owned by institutions. Revenues have been increasing. You can see the revenue change and earnings per share have been increasing as well. So pretty easy to see why Pega would be on our list. All right, so Pega on our list, breaking out today. I think if there was a pullback here, it would get interesting. We have PLTR, of course, we know all about PLTR. I'm not going to pull up the revenues, but strong revenue growth, strong earnings growth. Obviously, leading market stock. Look at all this good volume. Pulled back, not too deep, never violated the 200-day moving average. 50 always stayed above the 200 and back at all-time highs. So very easy to see why this one's on our list. In terms of an entry, I think it could be entered here. And the question is, does it hold the 9 EMA? But you can use a pretty tight stop if you get stopped out. No big deal. You could re-enter on a different entry. But I like PLTR here. Roblox, essentially the same thing. Has strong growth, strong earnings, has been a strong trending stock. Broke this bottom formation range. Remember that IPO high? The IPO high overall pattern we were talking about. It made its high here around 142, still at 80, broke this bottom formation, and now is in continuation pattern mode. RDDT, I still like this stock a lot. Strong revenue growth, strong growth stock. One of the few that we've been stopped out of recently. Now let's see if it forms a base here. And if it were to remount the 200-day moving average, I definitely would be thinking about re-entering. A lot of times when these strong stocks are good-looking overall patterns, you get stopped out. If it holds and then puts in another pattern, oftentimes that's when you'll get that really big run. So I'm still watching RDT very closely. Rocket Lab, aerospace and defense obviously has been very strong. Look at what it did in 2024. Had the pullback here, tested the 200-day moving average, 50 never violated the 200, and almost back at all-time highs. So kind of a common theme with a lot of our stocks that we're watching here. SAP, same thing. We don't need to go too deep into that one. SE, China specialty retail. This hits a lot of different areas that are important in the market right now. We talked about consumer discretionary and retail. Retail is actually pretty strong today. So it's retail, it's China, It's a relative strength, one of the best China stocks to trade right now. Look at the high here at 300 has bottomed out here. Notice here, one thing I really like about this is the volume pattern here and the money flow has been consistently strong, like almost always staying above the zero line throughout this trend. So nothing to really worry about here. Even when it pulled back, never really violated the zero line on the CMF indicator either, indicating volume patterns have been very strong. A little extended now. I wouldn't enter it here, but definitely a stock that's on watch. SEZL here, IPO high. Well, IPO high breakout was over here. This is just now kind of a all-time high, but breaking to the all-time high. This has been a very strong stock. I think it's a little extended here. If it were to pull back and hold the old high, I think this would be a very strong setup. Sprouts has been one of our favorites. Look at all the green volume. Look at the big trend. We traded it before the pullback here. We had traded this one. And now it's set up again. If you're looking for something to enter, Sprouts is definitely an entry right now. Shake Shack, this one has been a little weaker on the pullback, but what I really like, first of all, still has strong revenue growth, earnings, has had good earnings reactions. You can see every time it's had earnings, even if it gaps down, it's strong after earnings, makes a strong move after earnings. Momentum stock, and when it's had its deep pullbacks, the volume pattern stays strong, and that's what it did this time as well. Notice here, it had a deep pullback, now has made a nice run, and volume has been very strong on the run up above the 200-day moving average. In terms of an entry here, maybe a little more of a pullback or a break of this high. And then finally, Shopify, very similar stock to what we've been looking at, related to software and retail. And again here, above the 50, the 200. I think this one, if it holds a 90 MA, it would be a good entry where it is right now. All right, so we went over 10 more of the Focus 40. Either tomorrow or Thursday, we'll wrap up the Focus 40, focus and do the last 10, which is essentially 40 through 50. In terms of setups today, I'll go over those in the report. But I was getting really interested in App here as it has been consolidating. Sell H as well. It had a little bit of a gap down yesterday, but is holding the 90 MA, and the overall pattern is really strong for a bottom formation. All right, I'm going to get out of here real quick. If you guys have any questions or tickers you want me to look at, Joy looks like has traded credit spreads. Try to do them when the stock seems range bound. Yeah, that's very good. Credit spreads are a really good. One, if you just want to make it cheaper for you and take up less of your account. Two, if you have a very defined spot where you know you were going to get out at, credit spreads are really good because you weren't going for that long trending play anyway. So you're not limiting yourself on the reward in a sense. All right, guys, doesn't look like you have any other questions. So we'll do another one of these either tomorrow or Thursday. All right, talk soon.